Hey traders, Chris Dunn here for the E-mini Academy. In this video, I want to cover some live trades that we had from this morning and also talk about the week in review because it's been a really active week in the markets, and so I hope you guys have been doing really well. And before I jump into that, I just want to say that on Monday, we're having a trader meetup in Miami. So if you want to join that, shoot me an email at chris@E-mini-academy, and we're going to be having a happy hour in Miami this Monday. And then this Tuesday afternoon at 2 p.m., I'm going to be hosting a live market event where I'm going to show you the latest map trading strategy and our system in the live market, and hopefully give you guys some insight into what a real trading strategy looks like and how to really develop confidence in your approach in the markets and stop following gurus, stop trying to read the market, stop trying to chase and make subjective decisions, because as you guys know, that stuff just doesn't work in today's market. So with that said, let's go ahead and dive right into this morning's trade. Okay, so what we're looking at here is the E-mini S&P with the map trading strategy, and you'll notice that market open was right here at 8:30 Central Time, which is where we look to start trading. And shortly after market open, actually about 6 minutes after market open, we had a valid trade setup that was signaled by our trading software and had a scale in. And you'll notice that from the entry, we had a couple of profit targets that were predefined based on current market dynamics, and look to scale out about a third of the position here at the first target, adjusted the stop, and then moved up into the second target. And so I actually, in this blog post, I'm going to have a few other live trading videos from this week so you can see how the strategy executes these trades with a motionless and objective analysis. But what I want to do is just take you through a couple of screenshots so we can slow down and just talk about each area in the market as it played out. Okay, so this is a screenshot right around where the trade was signaled. And one thing I want you to notice is, there's no subjectivity, there's no cherry picking. When we have a valid trade, our strategy confirms that for us by giving us trade confirmation with the paint bars and the dots on the actual chart. Now, this isn't about reading indicators or reading the market or, trying to make subjective decisions. What this is about is having a rules-based strategy that you can fully test. And look, back testing manually is not enough. You need to be able to combine back testing, walk forward testing, and live market testing to make sure that you're not curve fitting or over optimizing or really just cherry picking. Because even in back testing, it's very easy just to go back and cherry pick and really not make sure that you have a real edge in the market. And so what we have here again is at the point of entry, a scale in of a couple of different areas with price action, and then as the trade developed, we came up into prior resistance and we knew that we had weakness into this level, and so covered 3 out of the 8 contracts and adjusted the risk. So what happens whenever you do that, if you close part of a position, it does 3 things. Number 1, it allows you to take some profit. Number 2, it allows you to reduce or eliminate your risk depending on where you move your stop to. And in this trade scenario, it didn't make sense to pull it all the way to break even, because we trade based on technical areas, not based on, just pulling it into break even because we don't want to lose money. It's based on the technicals. If you start focusing on the money and worrying about, well, I'm up on the trade and I just want to bring it to positive territory, and you don't pay attention to what the market is telling you, then more times than not, you'll get low ticked or you'll get taken out and then see the market move in your favor. All right. So what happened a little bit further, the market retraced, and again, notice how this was where our stop was below our entry. Once it popped up, we actually moved our stop well into positive territory. This is what we call a squeeze, and then finally at our second target, closed the rest of the position. And so let me go ahead and show you some student charts. So you can see this trader got in at the same area and took all of the profit at the first target. You can see the second trader is also trading in accordance with our pivot to pivot baseline management strategy, which is basically what we recommend for our new traders. And here you can see this trader scaled out at the first target, pulled his stop in too close, and then got low ticks. So this is why our live market room is so important, because we can actually give our traders feedback on mistakes they make or little adjustments that they can make to their execution that can really have dramatic improvements on their overall execution. And you can see this trader got in at the entry area and actually held the whole position all the way up to the second target. And this trader got in at the same area, scaled out at both targets. And you can see this trader got in at the same area and got out at the second target. All right, and then finally we have our last trader that got a fill at the first target and then scaled out at the second target. So the reason why I'm showing you these charts, guys, is just to show you the consistency among the execution with our strategy. You know, it's really important that whenever you're using a strategy, number one, you have a rules-based approach that has clearly defined rules for market direction, trade entry, and trade management. The second step is to be able to fully test and understand what parameters like risk, stop sizes, profit targets, and all those good things are working in current market conditions, because what worked yesterday may or may not be the thing that's going to work next week. And then step number 3 is to have a dynamic and flexible live trading plan where you can make adjustments on the fly if market conditions change. And I know there's a lot of people out there that are teaching old school strategies and saying that rules-based trading is not the way to go, but I'm telling you, over 70% of the market volume is now traded by algorithms, and most of Wall Street is at least using some form of automation. So we're not talking about these forex trading robots that'll make 98% winners and you'll make turn $5 grand into $1 million in 2 months. What we're talking about is combining rules-based emotionless approach with trader skill, being able to let software do what it does best, which is making emotionless and objective decisions, and let humans and skilled traders do what we do best, which is analyzing live market conditions and spotting changes in market dynamics in real time. Because at least where we are today in 2013, that's something that humans can still do better than machines, because systems and automation and algorithms are dumb. It only knows what we tell it to know, right? So that's why there's still a very real human element in the market. But at the same time, if you're still using old school discretionary strategies or you're trying to read the market, it's going to be very difficult to find consistency in your decision making. And if you have inconsistency in your decision making, why would you expect to see consistency in your trading, right? So hope this video is helpful. Again, guys, feel free to click the link in this post and get registered for the live market event on Tuesday. Shoot me an email if you want to meet up with us in Miami on Monday, and I look forward to talking to you soon.